In the ever-evolving landscape of finance, where innovation meets investment, two ETFs have emerged as focal points for those seeking exposure to the burgeoning cryptocurrency market. The YieldMax Coin Option Income Strategy ETF, or CONY, and the Global X Blockchain ETF, or BKCH, each promise a unique path to capitalizing on the digital asset revolution. But what truly sets these ETFs apart? How do their underlying asset allocations, thematic focuses, and risk profiles compare? And most importantly, which one is right for you? Today, we embark on a deep dive into the world of CONY and BKCH. We'll dissect their investment strategies, analyze their performance metrics, and uncover the key factors that could influence your investment decision. Whether you're a seasoned investor looking to diversify your portfolio or a newcomer eager to dip your toes into the crypto waters, understanding the nuances between CONY and BKCH is essential. So fasten your seatbelts as we embark on this financial journey. Let's unravel the complexities of these ETFs and empower you to make informed investment choices. In the next few minutes, we'll explore the building blocks of these ETFs, examining their underlying assets, investment objectives, and potential risks. We'll compare their performance, liquidity, and market capitalization, providing you with a comprehensive overview to help you make an informed decision. Stay tuned as we delve into the world of CONY and BKCH, and discover which ETF aligns best with your investment goals. What are the underlying asset allocations of CONY compared to BKCH? The CONY ETF, YieldMax Coin Option Income Strategy ETF, and BKCH ETF, Global X Blockchain ETF, have distinct underlying asset allocations that reflect their different investment strategies. CONY ETF, YieldMax Coin Option Income Strategy ETF. The CONY ETF is primarily designed to generate income by selling call options on Coinbase Global, Incorporated. COIN. Its asset allocation is heavily weighted towards Coinbase, because the fund's strategy revolves around generating yield through options on this underlying asset. This means the fund's performance and risk are closely tied to the price movements and volatility of Coinbase stock, as well as the broader cryptocurrency market. This ETF also occasionally holds a small cash or cash equivalent position to manage liquidity needs or settle options. BKCH ETF, Global X Blockchain ETF. In contrast, the BKCH ETF is focused on the broader blockchain and cryptocurrency sector. Its underlying asset allocation is diversified across several companies that are directly or indirectly involved in blockchain technology, cryptocurrency mining, and digital asset transactions. Major holdings typically include companies like Marathon Digital Holdings, Riot Platforms, Coinbase, and other firms engaged in blockchain infrastructure, cryptocurrency exchanges, and related technologies. The fund spreads its investments across different segments within the blockchain ecosystem, thus offering exposure to a wide array of blockchain-related industries rather than concentrating on a single stock or asset. CONY ETF is more concentrated, with its exposure largely tied to a single stock, Coinbase, and its associated options strategy, making it highly sensitive to Coinbase's performance and the crypto market. BKCH ETF offers a more diversified approach within the blockchain and crypto sectors, reducing individual stock risk by spreading investments across multiple companies involved in different facets of blockchain technology. Both ETFs offer exposure to the cryptocurrency sector, but do so through very different mechanisms and risk profiles. How does the thematic focus of CONY differ from BKCH, and how does this impact future growth potential? The thematic focus of the CONY and BKCH ETFs is fundamentally different, which significantly impacts their respective growth potentials and the risk profiles they offer to investors. Thematic focus of CONY, YieldMax Coin Option Income Strategy ETF. CONY is specifically focused on generating income through an options strategy tied to Coinbase Global Incorporated. CONY, a leading cryptocurrency exchange platform. The fund achieves this by holding shares of Coinbase and writing, selling, call options on them. The primary goal is to generate yield from the premiums collected through these options. This makes CONY a highly focused fund, directly linked to the performance of a single company, Coinbase, and indirectly tied to the broader cryptocurrency market. Growth potential. Limited upside. The use of covered calls caps the upside potential because if Coinbase stock price rises significantly, the gains are limited to the strike price of the sold call options. Income focus. The fund's income generation strategy is beneficial in a sideways or mildly bullish market, where high volatility in Coinbase stock price can result in substantial options premiums. Crypto market dependency. Given its reliance on Coinbase, CONY's growth potential is closely tied to the performance and adoption of cryptocurrencies. If the crypto market thrives, Coinbase's performance will likely improve, which could benefit the fund. However, in a bearish crypto market, the fund may struggle. Thematic focus of BKCH, Global X Blockchain ETF. BKCH, on the other hand, has a broader thematic focus on the blockchain ecosystem. This ETF invests in a diversified portfolio of companies involved in various aspects of blockchain technology, including cryptocurrency mining, blockchain infrastructure, and digital asset management. Some of its holdings include major players like Marathon Digital Holdings, Riot Platforms, and Coinbase, but it also extends to companies providing the hardware and software that support blockchain networks. Growth potential. Broader exposure. By investing across a range of companies within the blockchain space, BKCH captures growth opportunities from various facets of the blockchain industry, not just one company or sector. This includes blockchain applications beyond cryptocurrencies, such as supply chain management, smart contracts, and decentralized finance, DeFi. High growth potential. The broader blockchain sector is expected to grow substantially as blockchain technology continues to be adopted across different industries. This ETF stands to benefit from this widespread adoption, which could provide significant upside potential if blockchain technology becomes more integral to global business operations. Innovation-driven. BKCH's growth potential is tied to the overall innovation and integration of blockchain technology. As more industries explore and implement blockchain solutions, companies within BKCH's portfolio could experience robust growth. Impact on future growth potential. CONY's growth potential is more constrained by its income-focused strategy and reliance on the performance of a single company within the crypto space. While it might offer stable income in certain market conditions, its potential for capital appreciation is limited. BKCH, with its diversified exposure to the blockchain sector, has a broader scope for capital appreciation. It stands to benefit from the expansion of blockchain technology across various industries, which could drive substantial growth in the long term. However, this also comes with higher volatility and risk, as the blockchain sector is still in a relatively early stage of development and can be highly speculative. In summary, CONY is more suitable for investors seeking income with some exposure to the crypto market, but with capped growth potential. BKCH, however, offers a play on the long-term growth of blockchain technology with potentially higher returns, albeit with greater risk. The choice between these ETFs should align with an investor's risk tolerance, income needs, and outlook on the blockchain and cryptocurrency markets. What are the liquidity and trading volumes of CONY versus BKCH? The liquidity and trading volumes of the YieldMax Coin Option Income Strategy ETF, CONY, and the Global X Blockchain ETF, BKCH, offer distinct profiles, reflecting their underlying assets and market focus. Liquidity. CONY, this ETF, which focuses on generating income through options on Coinbase, COIN, generally exhibits lower liquidity compared to more traditional equity ETFs. Its trading volume tends to be moderate, reflecting the niche interest in options-based strategies. The bid-ask spreads for CONY can be wider, indicating lower liquidity and potentially higher costs for entering or exiting positions. BKCH, in contrast, BKCH is much more liquid. As an ETF that provides exposure to the blockchain sector, it enjoys higher daily trading volumes, reflecting a broader investor base interested in blockchain technology. The liquidity of BKCH is further supported by its inclusion of a diverse array of blockchain-related companies, making it more attractive to institutional and retail investors alike. Consequently, BKCH typically has narrower bid-ask spreads, which translates to lower transaction costs. Trading volumes. CONY. The daily trading volume for CONY is lower, which can be attributed to its specialized focus on option strategies related to a single stock, coin. This low volume suggests that it might not be the best choice for investors looking for quick trades or high liquidity. The ETF's focus on income generation through options rather than capital appreciation also limits its appeal to a niche audience. BKCH. The trading volume for BKCH is considerably higher. As it provides diversified exposure to the blockchain sector, BKCH attracts significant interest, particularly during periods of increased attention on cryptocurrency and blockchain technologies. This higher volume suggests that it is easier to trade BKCH without significantly impacting its price, making it a more flexible and accessible option for most investors. In summary, while BKCH offers higher liquidity and trading volumes due to its broad exposure to the blockchain sector, CONY is more specialized, with lower liquidity and trading volumes due to its niche focus on options income from Coinbase. How does the market capitalization distribution differ between CONY and BKCH? The market capitalization distribution of the YieldMax Coin Option Income Strategy ETF, CONY, and the Global X Blockchain ETF, BKCH, differs significantly due to their distinct investment strategies and underlying assets. Market capitalization distribution. CONY. Focus. CONY is a niche ETF that primarily targets income generation through options written on Coinbase, coin, stock. As a result, its market capitalization is heavily concentrated in a single underlying asset, Coinbase, which is a large-cap company in the cryptocurrency exchange space. Distribution. Since CONY's strategy revolves around a single stock, its market capitalization is concentrated in the large-cap segment. The fund does not provide exposure to a range of market capitalizations because it is not diversified across multiple holdings. Therefore, the market cap distribution is skewed heavily towards the large cap end, specifically tied to the performance of Coinbase. BKCH. Focus. BKCH offers a broader exposure to the blockchain sector by investing in a diversified portfolio of companies involved in blockchain technology, including those focused on mining, hardware, software, and services. Distribution. The market capitalization distribution of BKCH is more varied compared to CONY. BKCH includes a mix of large-cap, mid-cap, and small-cap companies. The large-cap companies in BKCH may include tech giants and well-established companies involved in blockchain technology. However, BKCH also includes smaller, more speculative companies in the blockchain space, leading to a more balanced distribution across different market cap segments. Diversification. The diversified nature of BKCH means that its market capitalization distribution is not heavily reliant on any single company, unlike CONY. This distribution provides exposure to both stable, established companies and high-growth potential small-cap companies within the blockchain industry. Comparative analysis. Concentration versus diversification. CONY's market capitalization is highly concentrated in a single large-cap company, Coinbase, making its performance closely tied to the fortunes of Coinbase. On the other hand, BKCH offers a more diversified exposure across various market capitalizations within the blockchain sector, reducing reliance on any single company and potentially offering a more balanced risk-reward profile. Sector exposure. While CONY is highly concentrated in the cryptocurrency exchange sector through Coinbase, BKCH provides broader exposure to the entire blockchain ecosystem, including companies at different stages of growth and development. In summary, CONY has a concentrated market capitalization focused on a single large-cap company, while BKCH offers a more diversified market cap distribution, encompassing large, mid, and small-cap companies across the blockchain sector. This difference reflects their underlying investment strategies and the breadth of exposure they offer to investors. How does the concentration risk differ between CONY and BKCH? The concentration risk of the YieldMax Coin Option Income Strategy ETF, CONY, and the Global X Blockchain ETF, BKCH, varies significantly due to their different investment strategies and portfolio compositions. Concentration risk in CONY. Single asset focus. CONY's investment strategy is heavily concentrated on options written against Coinbase, coin, stock. This means the fund's performance is almost entirely dependent on the price movements of Coinbase. If Coinbase were to experience a significant downturn due to company-specific issues, e.g., regulatory challenges, competition, or market sentiment, CONY would likely suffer substantial losses. This creates a high concentration risk, because the ETF's fate is closely tied to the performance of a single asset. Sector concentration. Beyond its reliance on a single stock, CONY is also heavily exposed to the cryptocurrency sector, which is known for its volatility. The entire fund's performance could be negatively impacted by broader market conditions affecting cryptocurrencies, such as regulatory changes or major shifts in market sentiment towards digital assets. Concentration risk in BKCH. Diversified portfolio. BKCH, on the other hand, invests in a diversified portfolio of companies within the blockchain sector. This includes companies involved in cryptocurrency mining, blockchain technology development, and related services. While the fund is still concentrated in the blockchain industry, it spreads its investments across multiple companies with varying levels of market capitalization, reducing the impact of any single company's performance on the overall ETF. Sector and market risk. Although BKCH is diversified across several companies, it still bears concentration risk associated with the blockchain sector itself. If the blockchain sector faces a broad downturn, e.g., due to regulatory issues, technological failures, or market disinterest, the fund would be negatively affected. However, the diversified nature of BKCH means that the impact of one company's poor performance is mitigated by the performance of others in the portfolio. Comparative analysis. Single stock versus sector diversification. The most significant difference in concentration risk between CONY and BKCH is that CONY's risk is concentrated in a single stock, Coinbase, making it highly vulnerable to the specific risks associated with that company. BKCH, while still concentrated within the blockchain sector, mitigates some of its concentration risk by holding a broader range of assets. This diversification within BKCH allows it to absorb shocks from individual companies more effectively than CONY. Volatility exposure. Both ETFs are exposed to the high volatility of the cryptocurrency and blockchain sectors, but the diversified nature of BKCH provides a buffer that CONY lacks. This makes BKCH less susceptible to extreme losses compared to CONY, which could be severely impacted by a significant drop in Coinbase stock price. In summary, CONY carries a higher concentration risk due to its reliance on a single stock, Coinbase, whereas BKCH, while still exposed to the blockchain sector, offers reduced concentration risk through diversification across multiple companies. This difference makes BKCH potentially more resilient to individual company risks compared to CONY.